Do you think that Janet Yellen is right to convene a meeting just for these? And I will tell you that, because I do remember a lot of things. I remember Janet Yellen's call on biotech, and I Googled it real quick, and I came with one of our great CNBC.com articles, remembering Yellen's awful biotech call last year. On July 16, 2014, she said that biotech was substantially stretched and was in for a day of reckoning, and then the next 12 months it rallied another 52%. So I'm not sure that necessarily that people can call or should be in the business of calling speculation and then regulating it. Are you?
Well, again, I go back to the great economist Charles Kindleberger. He said that markets unregulated lead to panics ultimately, and there is a need for some regulation. I'm not going to take sides on Janet's market timing because no one is good at it except for uber professionals. But I'm happy with the fact she's going to talk to the regulators to see what might be done. The purpose of regulation is to protect the investor, not to let markets run wild and hurt investors. So let's see what comes out of these meetings. We've already seen what happens when margin requirements are imposed, even though they haven't been imposed by the Federal Reserve. I think they're going to have to be thoughtful about this and very careful. But a lot of small investors have been hurt here. And I would hope that regulation seeks to protect rather than to harm. We'll see.
When we talked about it to try to highlight if we called it a social media orchestrated pump and dump, you should see the comments we get. If we say, well, we're just trying to say that, when the music stops and there's no chairs left and there's no more shorts left and you're at $500 on GameStop, who's going to be the stock that used to be $20? Who's going to be holding it from $500 as fundamentals take over? And we got a lot of grief. They said we're allowed to do this because we might lose money. We don't care.
They don't care when they're making money, but when they start losing it, I'll bet you they start to care.
Well, we'll see. Andrew?
Hey, Richard, though, the big question that I'd ask is just how you think regulators should think about effectively regulating free speech online, especially in these type of situations where you could have this social media enabled kind of trading. And on the other end, what could be argued as manipulation, recognizing that a lot of the folks online look at the kind of idea dinners and conversations that happen, frankly, over terminals and other things professionally, people think are the same thing.
Yeah, that's what I referred to earlier, the ubiquity and latency of social media, the instantaneity of communications has made this a much more complex problem. So again,
what would you do about
it's going to be a really hard thing for the regulators to sort this thing through. But let's remember, it's important that investors, including the investors in these kind of securities, are protected rather than harmed. And unfortunately, a lot of tears now flowing because of what happened with GameStop and Silver, et cetera. AMC. Go ahead, Andrew.
No, it's me again. There's more to it than just that, though. Now there's an income inequality aspect to this, and the small guy versus the market that's been rigged in their view by the fast traders and the algorithms and the hedge funds and the short sellers that short more stock than you're allowed to short. And I again come back to the Fed for making income inequality a lot worse and it's not, the Fed had to do what it had to do because of maybe the policies haven't always been great to generate economic growth on their own. So you needed the Fed to do it, but it has exacerbated all these things. And there is an us versus them, eat the rich backdrop to all of this. And it's really strong. And it's almost an Occupy Wall Street.
Joe, as you know, Joe, if you go back and read the transcripts, my 10 years at the Federal Reserve that ended in 2015, I worried aloud about the income disparity that was being created. We were making the quick and the rich richer and hurting the working men and women of our country. And that's not an ideological argument. To me, that was the logical conclusion of free and easy money. So I'm not against your argument here. But the point is this. This has happened over and over and over again in history.
Shepard Smith here. Thanks for watching CNBC on YouTube.